Hi people, thank you for stopping by at Building Wealth with Rajeev. Here's my deep dive in Nvidia. The company came out with quarterly earnings a week or 2 weeks ago. Fantastic company, great compounder. Now I have a story to tell you. A bit of love and hate relationship with the company. Love because the company is doing great. It's on the right side of change. Hate because I sold the company pre-split price at about $180. Had I not sold it, it would have been $750 or $800 by now. That's about 4 to 5 times. And all that happened because of the Warren Buffett's quotation that I should buy in my circle of competence. Now that wisdom cost me quite a bit. But I'm back now. I've done my homework. I've read about the company and I'm sharing with you. And I'm trying to accumulate it slowly at the low prices. I'm taking advantage of the low prices. If you like the content, please subscribe to the channel. Follow the channel, share it with your friends, like the content. And by the way, Mumu and Tiger Brokers, they're offering some promotions in both Singapore and US markets. I've listed them below. You might want to take advantage of those. See you. In the beginning, just try to get a bit of background on the company. Yeah, it was founded in about 1993. It's about 40 years old company by Jensen Huang, Chris Belachowski, and Curtis. I'm difficulty pronouncing the family name. I apologize. Yeah, but the most relevant thing is Jensen Huang is still the CEO of the company and has proved to be a fantastic CEO for the company. In a humble background, started with supplying graphics to the PC gaming industry, went to public in 1999 at only $12. Now, after that, it has gone through several stock splits. But if you look at it, company, it's easily about 45 to 48 times returns. That's a huge return, huge shareholder value they've created. Now they've come a long way, and now they basically operate among four pillars. Yeah, one is data center, one is gaming, professional visualization, and automotive. I'll go through them a little later in detail as well. In a nutshell, the company has gone onto the trend of artificial intelligence, data science, gaming, metaverse, autonomous driving, all the right things. The way the AI economy is evolving. I've just done a bit of a number game on this, and I'm trying to compare. I went to the Morningstar and looked at 2013 and 2022 numbers and tried to do the comparison. If we look at this and the numbers, the company has done so well. The revenue has grown about 6 to 7 times from 2013. Operating margins, which are show companies' operating leverage, how it has evolved, has gone from 15% to 37%, which is about 2.5 times. Operating cash flow has grown by 11 times. Free cash flow 12 times. Return on invested capital, return on equity about 2 to 3 times. And company works on healthy gross margin. It's about 64%. Now I did a bit of a comparison of the operating margins for Nvidia compared to what other FAANG players have. Let's say Apple or Facebook, Microsoft. So you can see that the company's operating margins have grown quite significantly. And now they are pretty much in line with what you call companies like Apple, even slightly higher. Microsoft operating margins are higher than it, and Meta's is kind of fluctuating, but pretty much on the same line. I think this is a big achievement for a company and being in the same league as these players are. As we discussed earlier, that about the 4 components of business they have, data center being one of them. Look at the data center growth here. It's about 66% cumulative growth rate over last 5 years. Number of registered developers on data centers have gone exponentially high, about 3 million people working as developers, part-time or full-time, whichever way, assisting NVIDIA. This is significant. And the cloud provider, all the major cloud provider working with them, whether it's Alibaba, AWS, so very strong client list. For gaming business, about 25% CAGR over last 5 years. Now, gaming obviously is the biggest business because it's 12 billion if you see, and revenue is about the data center is about 10 billion. So, but what management has said, and it's pretty much the Wall Street also expects that data center will be the bigger business in the year to come, and gaming might see a slowdown. But in terms of gaming, also 200 million plus gamers on GeForce. Professional visualization, the GPU, which helps, artists kind of and creatives, create that effects. It has grown about 20% CAGR over the last 5 years. 45 million designers and creatives, they work on NVIDIA somehow. Automotive is one of the things, is that how they enable the automotive companies to, be on autonomous vehicles, like, Tesla, self-driving, and other companies are also doing this. It's the growth for this business hasn't been huge, but I think the best days for this business yet to come, when the companies go autonomous. And they've recently created some kind of partnership with Mercedes to do it. So now let's take a brief look at the Q1 earnings. You can see this, there is a year-on-year growth is about 46%, which they've shown. It's pretty impressive. And if you look at the data center business, year-on-year growth about 83%, 15% quarter-on-quarter. Gaming has grown about 6% quarter-on-quarter and 31% year-on-year. As I said, that they're expecting gaming to slow down. Professional visualization has gone up by about 3% quarter-on-quarter and 67% year-on-year. Automotive is showing some decline, and I think these are some of the macro headwinds, because Russia issues, a lot of economies, supply chain issues. I think that's one of the things. Now, companies' 2023 outlook is, they've shown about 40% plus growth last year. Now, in 2023, year-on-year, they're looking at about 27% growth. So it's kind of a growth slowing down, and it's a little below Wall Street expectation. Maybe the company is playing safe. But the key reason for this is macro headwinds, because a recession or, Russia-Ukraine conflict, what happens to US economy. So that is more of the reason rather than company-specific reasons. And that macro impact will come to semiconductor industry, whatever company it is. Let's look into the stock now, how the stock has done so far. So if we look at NVIDIA here, the price right now is about $187. Year to date, it has declined by about 38%. And in last 5 years, it has gone up about 400%. And maximum, as I said, is about 22,000%. So you can see amazing growth for the company. Now, how is it doing in last 5 years? Let's compare it to QQQ. Which is index. You can see that it's in last 5 years, NVIDIA has done slightly better than QQQ. But if we see the maximum, then obviously NVIDIA is done far superior to it. It has beaten index big time over the longer run. Now, the current price as we see it is about $187, $188 right now. This is all the analysts, what Wall Street is thinking about it. There are about 32 ratings, all strong buys, and the average price is $271. So from that point of view, you can see that it's still below the Wall Street estimates. But if you look at the conventional ratios like PE ratios, price to sales ratio, this company will be more expensive compared to any other companies like AMD's or even Index. But quality companies, quality comes at a higher price. It has corrected significantly and looks like a nice, attractive pricing if you want to get into NVIDIA. Just summarizing, what are the positives of NVIDIA? Hyper growth, incredible cash flows, great profit margins. It's a capital light business model. You can see that the OPs are as good as the software businesses. Yeah, strong value proposition, right side of trend, operating profits are going up. They've done extremely well, and just to tell you, they're very consistent history of beating Wall Street estimates. So from that point of view, they're checking on all the important things. But now, what are the watchouts? Watchout is macro headwinds. The Russia-Ukraine war, what will happen to the US economy, and that will have an impact on semiconductor industry. And NVIDIA is not something which will be separate or which will be different. It will be affected. Valuation, people can argue on the traditional matrices like price to earning ratio, price to sales is a bit higher, but we've seen compared to Wall Street, it looks reasonable. It has corrected a lot. There will never be an ideal pricing point. That's how I think. Now, this is what the company is today, right now. But what is important in investment, as you would agree, what is the future for the company? The present is just present. Yeah, I mean, it's a lot of it is factored in. So in my view, if you look at this, the company evolution stage, from startup to young growth to high growth to mature growth, this is how the companies, evolve. And I would think that this company is still very much into the high growth zone. It's still on the upward momentum, and since it's on the right side of change, better days for the companies are still to come. It's pivoting to software, which is a more of a subscription business. So from hardware to software, again, that's a very, very positive sign. Jensen Huang in the recent annual report said that his new chip systems will greatly advance AI, graphics, omniverse, self-driving cars, robotics, etc. So CEO and founder of the company with extremely successful track record is very, very, very positive on the company. Now we've seen what is the company's background, how far has it come, what the future holds for the company. Obviously, we don't have numbers, but we know the direction, we know the right steps they are taking. So what does it mean for all of us? As I said earlier, I find the price point attractive. I have missed on this company once, and I'm kind of in my own humble capacity, I'm going to try to scale over a period of time. And what I've learned that in growth stocks, there's no point buying at one go because the price fluctuations will be huge. So it's good to do the dollar cost averaging. I've been reading about some of the analysts or some of the Wall Street people, and people who some of the people who are Nvidia bulls. They're talking about this company might take over Apple in the future. It might be one of the world's biggest companies. Now, who knows? These are only projections or predictions. But if you see that currently, the market cap of Nvidia is about $450 to $500 billion, while you have Apple, which is about $2.5 trillion. So if you see, the gap is still 5 times. Irrespective of that, where it goes, whatever is the future, I like the company. I'm going to invest in the company. It's going to be my long-term hold. You can make your decision. It's for education purpose only, all my findings, and do your own research before investing your hard-earned money.